Now it is.
Well, all right. Welcome to our LA Home Buyer Seminar. You missed the last 5 minutes, but we're back. But just briefly, search our YouTube page for all of the different education opportunities that we have out there for you. Just search the Collective Realty. We have so many different seminars. At the Collective, our mission is creating paths to wealth through real estate. So regardless of what that means, whether it's buying a home or an investment property or building an ADU or fixing up your property, we want you to create wealth and build and protect your wealth through real estate. So that might mean putting the property into a trust. What does that look like? We're your resource for all of those things. So those are all the types of things that we're going to be doing. We have an amazing panel here that you'll get to meet just shortly. We have lender, escrow, agents, all kinds of different perspectives in real estate. And what that's going to look like as far as your journey, it's going to make it a lot easier and help you figure out what those next steps are to take. So welcome. Why is it better to buy than to rent? What are the benefits? Yeah, Johnny.
So, it's better to buy because you are building wealth for yourself as opposed to building wealth for someone else.
Building wealth for yourself instead of someone else. Absolutely. Yeah, we always say stop building your landlord's wealth and start building your own, because you're paying rent. You're always building wealth for somebody. Might as well figure out how to do it for yourself. Anybody else?
I'll be the finance guy and see tax benefits.
Tax benefits. Absolutely.
You deduct all the interest and property taxes off your income.
Yeah, a lot of people don't realize like that first year how much money they're actually saving on their taxes, right?
Absolutely.
What else? What other reasons?
Stable monthly payment.
Stable monthly payment. Yeah.
If you're doing it 30 years rates.
Absolutely. You know, you have the opportunity to get into 30-year fixed rate. Even if you're in a rent control apartment, you don't have stability. You know, there's a chance that you can be moved. Your rents always go up, even though it might go up a little bit, they're always going to go up. When you have a mortgage payment, it stays the same for the whole term. And then at some point you actually have no payment. Like, what's better than that?
No landlord.
No landlord. Yeah, can paint when you want, you know. And yeah, building equity, of course, you know, markets go up and down, but they tend to typically keep going up. That's huge, right? Building equity. One lender told me one time, which it resonated really well with me, is that when you're paying your mortgage, there's no bad dollar you're spending. So some of the money you're spending, you're going to get back. You're going to get back in equity, right? Like you're paying off that loan. So that's a good dollar. So basically it's like a savings account. Part of the mortgage money that you're spending is going into a savings account. The other dollars that you're spending that are for the interest part of it, those are all tax deductible. So you're going to get a tax benefit from that. So every dollar you're spending has something positive. It's either you're getting 100% of that dollar back at some point, or you're getting part of that dollar back at some point. So it's just, you know, when you're renting, it's literally burning money every month. Burn. That's all it is. So those are the, I think, great reasons, right? Okay, so let's just kind of jump right in, because I don't know, I think a lot of people are wondering, and the biggest question is like, is it a good time to buy or not? And what's going on with the market, right? It's always changing. You know, we saw last year that there was a lot of buyers, there was multiple offers on things, and then all of a sudden interest rates went up and things slowed down a little bit. But what's going on now? Like, is it a good time to buy? Are people out there? Is it active? Anybody on this panel, feel free to answer.
I mean, it's always a good time to buy real estate, I would say, because we don't have a long-term downturn on real estate prices. So it's always a good time. Momentarily, is it a good time? I mean, I think in personal opinion, it's always good to invest in uncertain times, because a lot of people are on the sidelines and we end up getting good deals.
Yeah, it's I've seen you have a much better chance of getting a property now than you did a year or two ago. I think we're in this like window right now where getting into a property is easier than it was before, but I don't know how long that's going to last, because we're seeing, right? Cindy just had a listing with 20 offers on it. So they're more than 20. So there's properties out there in areas that are still just, you know, very, very hot and selling very quick. But I still think that there's opportunities are better now than they were. does anybody think here on the panel that prices are gonna drop more than 5-10% this year? Lender, he's the economist. This is the smartest one. No, most people are thinking that, a top economist too, that prices aren't really gonna drop much this year. If anything, we're seeing them go up a little bit. Condos are going up a little slower than single family homes, but housing prices are going up. So the longer you wait, the more money you're gonna have as a down payment. And it's gonna be more expensive. Rates change, right? So we can't really get into the market based on where rates are at the moment. They'll always change. And you get in at the rate that it is now, and once it gets better and it's worth refinancing, you refinance and you get a better rate, and instantly you're saving money every single month. So you always have that opportunity to do that. So keep that in mind too. But we don't expect prices to go down. The issue that we're really having right now that's keeping prices going up is low inventory, because so many people have got into homes or have refinanced over the last couple of years at very low rates that they're not selling. They're staying where they're at. They're going to stay a little longer than they thought, and they have a little extra money to spend now because their mortgage payments were less than they were. So they're fixing up their kitchen or they're building an ADU. So until that cycle runs through, there's going to be a lot less inventory on the market than we would really like. And that's going to put the demand and prices to continue to move up. So hopefully they're not going to move up as much as they were over the last couple of years, which was on average like 15% a year. Maybe they'll do 5% a year, but they're definitely in that trend. So sooner the better, and prices again are going to go up and down, but they're always going to continue to go up. So don't stress too much if you buy it and then 6 months later prices are down 5%. Just give it another year or two and you're going to be just fine. And remember, every dollar you're spending during that time is a good dollar. It's either going to be a tax deduction or it's going into that savings account for when you sell it and you're going to get it back. Question, yeah.
So much the seller's market right now, more than buyer.
What do you guys think?
A more balanced market.
I would say
balanced market.
I would say balance, but depending on area, it's slightly leaning to the sellers. Yes.
Yeah, and depending on property type, single family home, I would say is pricing right, is too pricey.
Because the inventory is so low,
Right.
how come people are more encouraged to sell?
Yeah, because inventory is so low.
Because.
Go ahead, Marty. Yeah.
And I can answer that because people already got rates like 2.5% to 3.5%. So they're kind of stuck in these homes because if they sell that home, they're gonna have to buy something else. People go into their home prices and get a higher interest rate. So they kind of like handcuffs at these homes at the moment in time. So that's what's causing it. And to your point, Anthony, I mean, logic says that, rates the prices should go down, and that's why everybody thinks when rates go up, generally prices go down. It's equivocal, but when you don't have inventory and we have this particular economic situation that happened, where you got such low interest rates, the scenario more than likely will be that values will stay here, and or when we go into a recessionary market and rates go down, it only will increase further at that point. So that's why I say it's a good time to buy. Because I feel like it's an opportunity right now before interest rates go down. So.
Okay. Great. Awesome. Come on in. Okay, so we're gonna switch to our next segment, which is gonna be I have a few questions for Marty, our lender.
Okay.
So in just a few sentences, credit, right? Everyone starts with credit. We have a whole video seminar on our YouTube page all about credit. So if you want to learn about credit, check it out. It's really good. It's like 20-30 minutes, but it goes over all the details of what it is, how to make it better, and so on. But in a few sentences, like what are the most important things people should be aware about when purchasing a home regarding credit?
Great. So a couple of things. There's a lot of people follow their credit on Credit Karma and things of that nature. So really, that's not a valid credit standing for us to look at. So if you're going to be starting looking at a home, make sure you speak with a loan officer or a lender that will pull your credit and get the vendor version of your credit scores versus your version, because oftentimes your version is vastly different than what we would see, and then you're kind of stuck. We had a situation like this: the client thought they had a 780 credit score on their Credit Karma, all ready to go. We pull the credit and it's like 640, and we're like, wait a second, and they're in escrow at that point. So they thought they had amazing credit. So Make sure you follow that. And then the other things are the basic things that we're taught is.
Can
make
he
your
Can he
payments on
speak
time.
closer to the
Reduce your
microphone?
balances as much as possible. Keep it at 30% of the.
Yeah,
closer.
here, come a little closer, yeah.
Okay, oh, there we go. Hi, everyone.
You're in the hot seat. Keep it going.
now. Okay. Yeah, so, and then make sure that you do the traditional things that you're supposed to, which is, make sure you make your payments on time. That is one of the biggest, measures of your credit score. Second measure is your credit usage, which is, how much of the balance you use. So if you have a $10,000 credit card balance, line limit, only use 30% of that or less. So definitely don't keep high balances on there for a long period of time. So that will pull your credit scores down. And then the other things are just, don't go applying for multiple credit cards or things of that nature. Otherwise, they'll start pulling your credit scores down as well too. But definitely watch that video channel.
Watch that channel and talk to a lender before you're considering buying, because you may decide that, hey, is it okay if I open this credit card that I need at the moment, or my car lease is up, what do I do now? There might be questions like that you should have a conversation with. So it is important, because the better your credit score, usually the better program you can get. You don't have to have the highest credit score to purchase. Like, you can purchase, what are some of the programs with lower credit scores, or what do those look like? Like the credit score. Like, so I'm just wondering if someone's out there and they're like, well, I have a 640 credit, is that good enough?
I'm going to answer that in a moment, in a second. I was going to tell you guys also, don't pay off your credit cards and close the credit card out. That is like a big no-nos. Please don't do that as well. That will diminish your credit history of that credit card. But yes, you could go as low as, with FHA loans, you could go as low as 500 credit score to get a mortgage. So there are programs that are lenient on your credit scores. So
what's a goal? Like, what's a great goal? Like, to get the best programs, you want to have over.
Yeah, you should be at like 680 or 700 or above of those numbers. So 680 is generally average. Anything over 700 is excellent for us.
Okay, and then I think the second question that people usually have is, a myth is like, I need to have 20% down to purchase a home. And I mean, hey, that's a lot. That can be a lot for a lot of people to save. But tell us.
Well, I mean, we're here to make home affordability possible. So there are programs with 0 down. There are programs with 3% down. So we measure to see what your best situation is to you and advise you accordingly. But don't shy away if you don't have even the 5% down, because you can definitely buy a home if your income permits with very little down payment.
Awesome. And we always have people too who are following us on here from our social media, and they're always talking about house hacking and 3.5% down to buy a duplex or triplex.
Oh yeah,
you can do that, right?
Absolutely.
It's possible.
3.5% down. So
the numbers work out. You can get a fourplex with 3.5% down. So I mean, it's definitely something to consider when you start your path to building wealth. Maybe get a duplex, and have a little extra income come in from half of the duplex, and you live in the other half. It's an option. So
I always say, if you buy a duplex, you're buying 2 homes for the price of 1.5, basically. So yeah, so you get a little bit of a better deal, I feel like. So
yeah. And there's limits, right? There's price limits to that. So you'd want to talk to your realtor and lender about what those limits are, and if that works in the area that you're looking for, because duplexes might be a little more expensive in some areas than others, but it's just something to keep in mind.
I mean, believe it or not, you can go all the way up to $2 million with the duplexes, with 3.5% down. It's pretty lenient.
So there's a lot of programs out there, right, for down payments, 3.5%, 5%, 10% on up. Let's talk a little bit about like interest rates. So interest rates are kind of a hot topic right now, and some people are like, well, they're higher than they were. What can we do to get a little bit lower interest rate right now? What are you advising people to do regarding interest rates right now? So if they wanted to not get a 30-year fix, they're like, I want to get a little lower interest rate for a few years, or I don't know.
Yeah, I mean, listen, I've been doing this for almost 30 years now, and it's kind of scary to say that number, but it is true. So, but that said, I would say, interest rates are not going to be around here for much longer, just based on what we're hearing from the economists. But again, I'm not here to advise you guys and be a forecaster. So I do think that interest rates will be on it's starting to go down maybe later part of this year. And so I'm personally advising people to take adjustable rates, because you're not going to keep that mortgage for a very long period of time. if the program is better. So now we've got other economic things like inverted yield curves and stuff like that. That's, you know, makes adjustable rates not as vastly different than a 30-year fixed rates. So we'll advise you accordingly. If you can get a lower interest rate with an adjustable interest rate, I wouldn't be afraid of that. I would say it's a good time because you're probably going to get out of that loan, you know, within that 5-year period anyway.
Yeah, that's why these seminars are really timely and important, because the advice we give is different at different times, right? What we said 2 years ago would be different than what we're saying now. We're trying to help you build wealth the fastest and most efficient way, the safest way for you. And, you know, the advice that we give and the programs that are out there, depending on the market, are always going to change. So right now, this is the best advice.
Yeah, I mean, like you said, I mean, a couple of years ago, we were like, no, adjustable, get a 30-year fix. There's no way he would give you an adjustable loan at that point.
So I still think there's some people out there who are like, okay, 5-year, 7-year, 10-year. I'm a little worried about that. That's a little too short of a time maybe for me. I'm more, I need more stability. So I want a 30-year fix, but I want a lower rate for a couple of years.
Yeah,
Tell us about how that could work.
yeah, there's mechanisms out there now, and they've been out there for a long period of time. They're just not being used until now because it's necessary with the higher interest rate markets that we're in. So there's things like a 3-1 buy, a 3-2-1 buy down, a 2-1 buy down. Those are tools that your realtor knows and will tell you about when you guys are negotiating for price and also a closing costs. But the seller could potentially buy a couple of points for you for the first 2 or 3 years. You'll have vastly lower payments to get into a home, and that's paid by the seller and or whoever else, like an interested party that could apply towards it as well. So, but it's definitely a tool that you could get. Like right now, if the rates are 6.5%, you could be at 4.5% for the first year, and the second year could be 5.5%. So
great,
yeah.
And those of you, we have like 20 people online that are watching and maybe 10 people here. We'll have time for questions. So write your questions down, and at the end, we'll go over any questions that anybody has, because I know there's some that were going to come up. So those are okay. Those are great options, right? So there's ways to have stability and still save a little money on interest rates for those first few years. I love that. I think that's what I would do. I don't know.
Yeah.
Okay, so besides paying your mortgage payment, you know, towards the house, there's other costs that are involved every month that you're paying. So we say PITI, principal, interest, taxes, and insurance. So tell us maybe just a little bit about how those numbers break down, and when you meet with someone, how making sure they're aware of all those numbers. Yeah,
absolutely. Yeah, because when we give you payments, we're going to tell you the principal and interest payments, but then there's also 2 other pieces that go along with it, or it could be 3 pieces depending on what type of property you buy. So you're going to have property taxes, you're going to have insurance you're going to buy, which is to protect your property from things like flood and theft and things of that nature. And then there's also another thing that if you're buying a condo, there's an association fee, HOA. So those are 3 additional pieces that you would have to comprise your monthly payments. Sometimes we put those in your monthly payments. Sometimes we exclude them out of your monthly payments, and you make those payments on your own. So we'll have to teach you about the budgeting piece of it and all that stuff when you do it outside of that payments. So, but yeah.
I think so. Regarding property taxes, keep in mind it's going to be 1.25% of your purchase price, and you're either going to pay that twice a year or you break it down every month, and it's part of your mortgage payment. That's what I recommend for my first-time buyers.
I've always done it.
Break it down, make one payment, have it be consistent. It just makes budgeting, I think, a lot easier. But if you're like, no, I'm going to save money every 6 months and I want to do it that way, you have that option to pay it every 6 months to do that. But 1.25% is the number you need to think about. So if you're buying a $600,000 condo, your property taxes are going to be, I don't know, $7,000 a year, approximately, something like that. So you can break that down per month, or about $600 a month.
Oh yeah,
right.
If you do, that's 6 to 8, somewhere around there.
So in the 600s a month is going to be additional to your mortgage is your property taxes, and it's tax deductible, right?
Property tax all the way up to $10,000. It is.
Okay,
yeah.
So hopefully most of them will be tax deductible.
As soon as like mortgage insurance, sometimes it's tax deductible as well too. So that way, I mean, we can talk about that another time. But there's mortgage insurance as well that you get. Should we talk about that for a second?
Yeah.
When you put less than 20% down, anywhere in the United States, you're gonna have this thing called PMI, payment mortgage insurance. And that's something that you want to talk to your lender as well too. So, if in case you're putting less than 20% down, that's something that we're gonna have to be discussing with you. And that's tax deductible as well.
Okay. So just to wrap it up with Marty, is there anything else you feel like right now people need to be aware of, people should know? Anything else you want to say?
Yeah, I just want to make sure that everybody understands that, when you go to a bank and they say no, that doesn't mean that's the beginning and end of you qualifying. So make sure they speak with someone that has a big variation of products versus just, taking your bank's word for it. Banks are ultra conservative sometimes and they don't look at all the different options. That's one thing. And the other thing is like, the more education you get from a company like us, the more comfortable you'll feel about the buying process and your options. So sometimes people feel like they can't get a mortgage because they're self-employed. We have all the different products for people like that as well too. So definitely reach out to us and don't be afraid. There's no commitment. It's just a matter of like getting more education for you.
Yeah, and just a plug for Marty and his team. They have been so amazing with all of our clients here at the office. Sometimes when you're working with bigger banks, they have more overlays, what they say, that so basically it's harder to qualify for a loan at bigger banks. So with companies like Marty at Arcstone, it's a little easier to qualify. You're going to get much better customer experience and get in any type of loan that's out there. They can shop around for whatever it is to make sure you're getting the best fit, not just whatever that one bank is offering at that moment. So this is the way that I advise. This is why I've worked with him for so many years. So thank you, Marty. I know you gotta get off to your next thing, but thank you so much. We're gonna bring on our next two people, Harrington and Cindy. Come on down. And if anyone has mortgage questions, we do have someone from Arcstone here who will be answering them at the end as well. So come on in, we're gonna switch gears now and we're gonna talk about if you're planning to buy, like how early should you come on, it's good. And then for the cameras here, this is what's going on down here. How early should people plan ahead and what do you advise them to do?
Yeah, I mean, from all clients that we've worked with, we've started with people where the first day that we meet them, they want to start the home search. And then there's others where we're talking to them, keeping them posted on the market, the interest rates, what's going on over the next year. It's really just going to depend on each person, what's going on in their life, both personal and business. I mean, personal, you need to look at what could be going on with your family situation. Are there any things going on in your credit that you need to fix, like Marty was going over? Business could be, are there any possible changes going on in your business life? If there's layoffs, possible promotions, salary increases, those are all things to consider, obviously, along with the market and interest rates. But overall, we like to just keep you posted. And the most important thing is no matter what's your timeline, we want to help you determine a budget and get you in touch with a lender that you trust, like Marty, for instance, to help get you guys pre-approved and really know what it is that you can search for and what your budget really can deal with. And also, again, with the credit report, Marty will be able to help you determine what are some things that you can fix or do to help get you a better rate, better credit rating, all of that.
Okay. So talk to us more about, working with a buyer's agent, how that's important, especially in the market that we're in right now. What are some things that buyer's agents will do?
So working with the buyer agent is actually really important. Not only they're gonna find you, your dream home, but they're gonna actually take you step by step. From the beginning of touring and finding the property, do the transaction of escrow, which meaning they're gonna review the contracts and make appointment for all the inspections, appraisals. So they are gonna take you step by step so that you're not lost or you're by yourself doing this whole thing transaction by yourself. And they're gonna take it through all the way to closing. And after the closing, even afterward, they're gonna help you with the whole transaction.
So what are also some reasons why a buyer why wouldn't you just go to the listing agent and write an offer with the listing agent and just every day go to a new listing agent? What are the disadvantages of that?
I mean, the disadvantages, obviously, some buyers see it as, oh, they can help me kind of negotiate from the inside and get me the best deal. But a lot of what that is too is, at the end of the day, you want to have someone that's representing you and your best interest. When you have someone representing both sides, no matter what they say or what contract they put out there, that we're going to represent both sides equally. It can be tough at times.
And actually, the law says that the listing agent has to represent the seller first. Your fiduciary duty as a listing agent is to represent the seller first. So, I mean, that right there, I think, why would you do that? Yeah.
And at the end of the day too, you know, typically a client for the listing agent, advisors, whatever, they're going to do what's in the best interest of them. So even though a listing agent may gain double commission by representing both sides, that doesn't necessarily mean he's going to get you the best price, because the client wants the most money at the end of the day, the best contingencies. Like, so whoever brings that offer is likely who will get the home. So.
Okay. Anything else about buyers that?
Kind of just how John went over, we're there for you for everything. I mean, and another great benefit for using an agent aside from yourself is we've been in this business for a long time. It's our everyday job. So we have tons of people in our network to recommend as far as escrow, title officers, inspectors, repairmen, you know, without having us that are doing this every day and really know them and have that relationship with them. You're just relying on Google reviews and hopefully picking the right person. So.
Okay. Cindy, you want to come on up in the middle and join them? So, we're going to switch gears now. I have just a few questions for some of the agents in our office who are doing a lot of business right now, and they're really on the ground, know exactly what's going on. So what are, you know, I guess areas are important, right? Like LA is so big. We're doing deals in LA, Orange County, all over the place. What are some of the hot areas that you see are good investments right now? What are popular areas that you think would be interesting? Any of you, go ahead.
It depends on what kind of price point you're looking for. If you're looking for something under like 700, I would say some of the Southwest area is nice. Pico Rivera, Montebello, and they're picking up really well. So I still feel like Pico Rivera is like a hidden gem. I know a lot of people don't even know where Pico Rivera is. Take a look at the map. The houses there is still priced a little bit lower than Whittier, because initially Whittier was the first time home buyer heaven, but it's no longer true. The home price has actually gone up a lot. So take a look. South LA still have a lot of potential. I know some people feel a little bit sketchy, but there are a lot of homes. One of my girlfriends actually living on Fifth Ave. I don't know why a lot of homes there have a lot of potential to do a house hacking. You know, my listing will be coming up soon. That is great potential for house hacking on 4th Avenue. So take a look at that. I always tell my buyers, there is no dream home. List out your must-have. Let's say you want to improve your wealth, gain wealth. Look at the big picture. The house may look ugly, but put in a little bit of work, add values to it, and you may make more money down the road. And you know, split the house into multiple sections, rent out the back house, turn it into junior ADU, or build the detached ADU.
Yeah, a lot of people don't realize that, you know, if your lot's big enough, you can build an ADU on any lot and a junior ADU. Junior ADU is just a small one that's attached to the house. It's a little less expensive to build, less, you know, requirements from the city, but it's another way to build wealth over time. So keep in mind, if you're buying a single family home in the long term, is there room to add on and to put on some type of income opportunity? Carrington, any areas that you see are good buys?
Yeah, I mean, my primary focus is in the West LA areas, and I see lots of areas that have that. You know, the primary things that I look for is what has a strong history of growth and just stabilization within the market, and or what is central and is showing a lot of recent growth within West LA. So some of those areas, for instance, would be Brentwood or the Westwood area. Those have been very stable, and along with that, they've increased very well historically to show well as a great investment. And then for new areas that are really growing well is like Culver City, Inglewood, Playa del Rey. And some of the reasons for that, for instance, is you have Apple that's now building offices in Culver City. So the second you get big tech coming in, that's going to help raise prices because you have high salary jobs looking for places to live nearby. And same with even the West LA near Westwood area, just on the mall on Pico and Olympic, you have now Google taking over those offices, and they're on a 15-year lease, I believe. So again, lots of big tech and new corporations coming.
Yeah, those are great points. Okay, so any other areas? I mean, it's right, it's gonna be personal to everyone, but I always say explore the areas, take a look at them. Go to the grocery store. Where are you gonna go to the most in that neighborhood? Take a look at that area. Go there at night. Just explore different areas because so many areas have changed. One thing too that I've noticed is school districts change. It's like you might have heard, oh, by the way, this school district, it's the best area to buy because the best school district. They change. It's not always the case. Some areas are getting better and better and better, and others are going down. So what are those trends? You might want to research that if that's something that's important to you as well, because the better the school district, usually that area is going to hold much more value longer. So school districts are attached to value. I mean, I don't know. I still think North Hollywood is kind of interesting. It's a big area, but there's some really cool neighborhoods where you can get single family homes, condos at, great rates. You're so close to the freeway. It's still pretty central, pretty interesting. I mean, Burbank, Glendale still have some really, really great deals that are going on. And they're also good school districts and great neighborhoods. So there's a lot of options out there depending on where you work, right? How far are you willing to drive from work? Will help you discover different neighborhoods in different areas. Okay, so I think, when people are searching for homes, they're wondering like, well, what's the best way to search for a property? Is it go to Zillow or, I don't know, people just go to these big sites that they hear. How do you advise your clients to search for homes? What site or app or what's the best way to search?
I mean, obviously, I try to get them off of Zillow as quickly as possible once I start working with them. But the biggest recommendation is HomeSnap, which basically it gives you total access to everything that we see on the MLS as agents, which is the multiple listing service. And we are able to send you an invite. And so from there, you can see all the active listings, things coming soon, recently sold. And we're also able to help send you properties directly from that to really help you track the market and find homes that you like.
Great. Yeah, I love HomeSnap.
Yeah.
It's updated. It works. It's easy to search. Okay. Condo versus home. A lot of people are in a price range where like, okay, I want to spend $750, $800. Can I buy a home? Should it be a condo? I heard condos are a waste because you have an HOA fee. Like, what's that all about? Opinions on condos and homes.
I personally, if you have the money, buy a single family home. I always feel like single family home actually has potential to get more appreciation, faster especially. Condo, or townhomes, it depends. When you're buying a condo townhomes with HOA, you have to really pay attention to what kind of HOA, because HOA can be very different. Every HOA is different. Some of them may charge you $500, some may charge you $1,000, some is $280, but you have to pay attention to the CCNR, which is covenant conditions and restrictions, rules and regulations, and how much money they have in the reserves. So some of the HOA may appear cheap, but then when you look at them, they're poor. And which means that down the road, they may raise the HOA. So you have to pay attention to how they maintain the property. HOA typically cover the exterior, the common area, the roof, the paint job, security, the gate, the pool. But it's like a saving account, that someone's taking care for you. And if you are a single family homeowner, you have to have a saving just in case things happen. Like roof leak has been pretty common.
Yeah.
Yeah, I think that's a really good point what you said, right? If you're getting a single family home, you have to have a savings account for repairs, because if something goes wrong, it's going to be a big expense to fix. If you're in a condo, there's usually not big expenses. Once in a while, there might be an assessment, but usually it's your HOA dues. It creates that stability over time to pay for the roof, to pay for plumbing issues, to pay for sidewalks that need repair and so on. So the money that you're paying for HOA dues is not necessarily a waste, right? It's going to maintain the building. If you own a home, you need to also save money aside, several $100 a month, just in case something goes wrong down the road.
So you had a question?
Yeah.
Two-part questions. So if you get a single family home, what insurance would you advise people to get 100%? So in case they want to cover their bases, like those insurance are a must.
Yeah, we usually need to get the general liability fire insurance, depending on how big is your house and where your house is located. Always talk to your insurance agent, because for instance, if you want to buy a hillside property, your home insurance might be higher because of where it's located. Like my listing is located in a very high fire hazard zone. So you have to pay attention whether the typical home insurance will cover that location, or you have to get a California Fair Plan. So that's something you have to talk about. But a lot of times when you buy home insurance, I know a lot of people like to go cheap because it's a monthly payment for you, but when things happen, you wish that it covered more.
Yeah, and same as far as earthquakes, if you're close to
Yeah.
the fault line, they're gonna be increased, so on and so forth.
The condos, so if you have an HOA,
You buy HO6 insurance, just cover it.
Yeah, so
that sometimes can go up, right?
If you file a
Sometimes
claim,
I
yes.
get Condos,
If you file a claim, yes.
sorry, what's that?
like I had a situation where somebody, we just bought a condo in Malibu,
Uh-huh.
then it's not his condo, it's another condo 2 doors down. The roof leaked,
Uh-huh.
all of a sudden skyrocketed $100.
Right.
His personal insurance or the HOA's insurance?
Great for.
Oh, yeah, okay, yeah, the master insurance.
The master insurance that happens.
Yeah,
Because they file a master insurance claim, so that's why.
Yeah, there's, yeah.
It also happened to my client too. One leak and then flooded other units. So guess what, everybody's insurance is gone up. Yep.
The best thing you can do as well in escrow, we obviously ask the HOA, has there been any insurance claims within the last year or 2 years? And then has there been any big projects proposed or possible repairs needed that you could see an insurance claim in this near future for some of us? So, yeah.
Okay, so talk to insurance agent. Definitely, there's a lot of options. And yeah, different amounts you pay covers different things, but get good coverage because it's worth it when things happen. So let's switch gears a little bit and wrap up our buyer session before we get into escrow. Just kind of talking about the market that we're in right now. It's a super busy market, and if there is multiples and you hear that there's cash offers on the table and you're like, well, I'm getting a loan, do I still have a chance? Does cash always beat loan? Cindy?
Cash is not always king. It depends on the seller motivation. If the seller wants a better price, a loan person may still have a chance. But then I would say that you have to talk to a person like Marty, because there's always ways to write your contract and make it more appealing. Could be as aggressive as a cash buyer. Because sometimes, Marty, when you do all of these pre-approval underwriting, they can give you basically a green light to remove loan contingency and appraisal contingency and make your offer cleaner. So all you need to do is a couple of days of physical inspection. That is still very appealing to the seller because you typically can close sometimes as aggressive as less than 21 days, right? Right, look at that, they can close sometimes, like 2 weeks or less than 21 days. And then no loan, no contingency, maybe 3 days of physical inspection, boom, similar to a cash offer.
Yeah, and the contingencies are going to be really important. So make sure you review with your agent contingencies. Should you have no loan contingency, no appraisal contingency, a short inspection, short escrow, all of these things are going to be different value to the seller. Your agent will help guide you to figure out which ones are the most important and how to make that work.
Sometimes, that we always have strategies to write the offer to make it great. I'm not gonna explain too much, but I use different tactics, to make the offer appealing. Those contingency is basically your comfort level. Some people don't like to take the risk. What if things happen? What if it doesn't appraise? What if something happened to my job? Then, but there's always ways. Seller, what's the motivation? A lot of times it's money. So we have ways to make the offer even better than a cash offer.
Yeah, we definitely have some strategies that we use at our office that I don't see other agents using, right? I'm shocked, shocked that everyone doesn't use some of the strategies that we use. But when we use them, we have a much higher chance of getting offers accepted. So, talk to us and we'll help you get those through.
Whether you want to use that strategy. Everything comes with pros and cons. It's just your risk tolerance level.
And just to build off kind of what Cindy and Anthony were saying too, sometimes there's confusion among first-time buyers or even first-time sellers that, cash versus loan. At the end of the day, when escrow closes, you're getting the same amount. There's no difference at all. So what it's about is who can bring the best offer money wise and also make escrow the easiest process contingency wise. And so whether you're cash or a loan, as they're saying, there's many ways to work that to where we can still make that one of the top offers, if not the top.
And another advice, pick a very friendly agent. Yeah, I'm serious, just based on my. Be friendly to other people because that will bring you further.
Yeah.
Because if you're not nice, sometimes somebody didn't even want to work with you.
Yeah, it's shocking how many times that the agent makes a difference because of the agent's personality and relationship. Because they feel like the agent feels like, well, I know this person, or they've been so friendly, following up all the time. Why shouldn't I work with them instead of this other guy who's been harassing me? And I feel like there could be liability issues, and there's just a lot of things that come up. So the quality of the agent, that also matters. Yeah. Okay, so let's go over to Lawanda with VIP Platinum Escrow. Welcome, welcome.
Thank you. Good morning, everyone.
So now we found our house, we wrote an offer, it was a multiple offer situation, we got it accepted. We're gonna open escrow with Lawanda. Now, what are the first things that a buyer should be aware of? What happens next?
Well, I want to explain a little bit about what escrow is and how we help put together or actually, close the transaction. So escrow, the function of escrow is to be a third neutral party. And we work with your agent. Once your offer is accepted, we work with the listing agent. We work with the selling agent that represents the buyer. We work with the lender, and we take the information from all parties. We put it together based on what both parties have agreed on, seller and buyer. And, that's what basically the function of escrow is bringing in and accumulating all of the paperwork, processing the paperwork, to make sure that it's within compliance, to make sure that everything that you agreed on is taking place. And obviously, it's very important because this is the last step. So, it's very important for the buyer to have a little bit of knowledge of what the escrow company does. And that's what we do. We take, the information from both parties and bring it together. And we start working on your closing process with your lender.
Yeah, they're like the mediator, the middleman in the deal, where they coordinate everybody in one spot. The realtors have their own paperwork, title has their own, the lenders have their own, but escrow is like the mothership that will bring it all together, make sure everything happens the way it should, oversees everything, and make sure your deal closes. So there's a lot of eyes on a transaction to make sure that it closes and that you're protected as a buyer. You have your agents, you have your transaction coordinators, you have escrow, title, lenders. Everybody's seeing paperwork in a different way. So you're very, very protected to make sure that things are going to go through and in a strong way. So when escrow opens, typically we want to have a 3% deposit that gets deposited into escrow within 3 days. So how does that happen? Like, I'm asking because right now wire fraud is really common, and that's a big issue. You don't want to put in a deposit to escrow and then all of a sudden you actually are wiring it to some other country. What do you do to protect clients with that?
That's a great question. And it's very important when you open escrow and when you're getting ready to send out and process your wire, to receive the instructions directly from your escrow company, your escrow agent. So those wire instructions are going to be mailed to you in a secure manner. At that point, my recommendation is for you to contact your escrow company, verify the wire information before that wire is initiated, because once that
call them.
It's so important. Once that wire is released from your institution, from your bank, it's very difficult for you to get it back in the event that there was some type of wire fraud. So it's very important for you to communicate with your escrow company to verify the wire information that was received directly by your escrow agent. Very important. Do not take wire instructions that were handed to you by any third party. Make sure that they always come from your escrow officer and verify that information. It's very important.
Great. So when a buyer enters escrow, they're going to be getting, besides signing all the purchase contracts, they're going to also get documents to sign from the lender. You have their paperwork and also documents from escrow. So what are some of the things that you're going to be sending out to the buyer?
That is correct. So when escrow is opened, the first couple of days, once escrow is open, you're gonna be overwhelmed with the amount of paperwork that you're gonna receive from your escrow company or your escrow agent. But do not be alarmed. You know, your escrow agent should be able to walk you through the process of completing the paperwork. It's very important for those documents that are being sent to you are signed and completed right away, because that is a floor plan for the escrow company to help you and to help your lender with the information that your lender is also going to need. For instance, we're going to ask you to complete information based on the fire insurance company that you want to use. If you haven't already you know, shopped around for insurance, that would be a great time for you to start shopping around for insurance. We're going to ask you to verify the manner in which you as the buyer want to vest for your new property. So that's very important. And your escrow company will give you information on different manners of vesting and will help you complete the paperwork. But it's very important for you to, you know, complete that paperwork and return it back to us right away. It's to help everyone else is involved in the transaction process their paperwork in a timely manner and make sure that you are meeting your timeframes as indicated in your purchase agreement.
Yeah, absolutely. So then we get closer to closing. What usually happens the week before closing? What are some of the things that a buyer would need to be aware of that last week? Because there's a time during escrow where there's not much that's happening for the buyer. They fill out their paperwork at the beginning, you do your inspections, and then there's kind of a waiting period for the lender to finish some stuff. Then the last week, we need you again. So what happens then?
The last week before your closing takes place, and I think that this is the most exciting time for the buyer, because during this time, you're gonna be in contact with your escrow officer and your agent very closely. So you're gonna be putting aside times for possibly signing your loan documents. You're gonna be advised during this time that you are going to have to start preparing, you know, your closing wire. That wire will be sent to the escrow company based on the information that the lender provides to you on your closing statement. So that's gonna be your closing funds.
So
And-
yeah, that's your down payment, right? Down payment, whatever other fees you have. Besides that 3%, whatever's left, that's what we need.
Yes.
Right.
During this last week, you know, it's a great opportunity for you as a buyer to start, you know, mentally preparing yourself to start changing addresses in your bank. Start, you know, getting the information from your agent on your utilities. Just start preparing yourself. But during this last week, we're gonna sign loan documents with you. Those documents are gonna be returned back to your lender for review. Once everything is reviewed from your lender and everything is acceptable on all parties, then your lender is gonna request a wire for the funding of your transaction. That is going to be sent to the title company. The title company will then record the grantee and you will officially be a homeowner. Once the grant deed is recorded, you're officially a homeowner, and then the escrow company will disperse the final funds and your file is closed.
Champagne time.
The big day is here and you get your keys.
Yeah, get my keys. Wonderful. Thank you guys so much for being here, for giving all of your wealth of wisdom. For all of you who are on Zoom, 20 people, and you guys who are here in the office, now's the time to ask any questions you have. It can seem like it may be a little overwhelming purchasing a home. but we're here to guide you, right? You have a team. You're gonna work closely with your lender, with your agent, with escrow, and you have an amazing team that's gonna guide you step by step to figure out, is now the right time? Is it in 6 months? Is it in a year? Regardless of when it is, you guys have already now taken that first step of learning what the process is. The next step to take is to meet with the lender to find out how you qualify. Once you qualify, and you find out what your purchase price range is, then you can start working with an agent and go shopping whenever you're ready. So those are the simple steps to get to the next part of your journey in building wealth. I love teaching. I love helping people build wealth. This is my passion. So we'll stick around as long as you need us to, but now's the time for any questions that you have from online or here to ask them. This is recorded. It will be on our YouTube page on Monday. So if you want to rewatch it or send it out to anyone that you know that this might be helpful to, please do. And yeah, check out our page for other information and, you know, like our posts and help us grow so we can keep spreading the wealth and help people to start building their own wealth rather than someone else's. So thank you, everybody.
Okay, questions?
Questions?
Any questions?
Anybody?
Yes, what is your YouTube address?
I think it's Ed is talking.
Ed, hey Ed.
I
I cannot hear.
So the YouTube address, if you just go to YouTube, just type in The Collective Realty and you're gonna find it. So just go to YouTube and put The Collective Realty.
all right. And this is my face in case you were wondering what I look like.
Hi, Ed. I haven't seen you for a while.
How are y'all doing?
Good.
Awesome.
Questions, anyone? Yes, Hannah.
I think it was Harrington who said, he doesn't like his buyers to go on Zillow, but I feel like all my friends and stuff, like they're always looking at Zillow, so like why is Zillow, frowned upon compared to the other websites you said?
Yeah, so using any third-party site, the data gets transferred there differently than other places. So there may be open houses that are listed that really aren't open. There may be a price range that you may not see. It's just not going to be as quick and as accurate as HomeSnap. On HomeSnap, you're going to get a little bit more information than you will on the other sites as well. And then, of course, for the realtors, we're able to see all the private remarks on HomeSnap as well. So we know if someone's leasing the property or if there was a flood and you need to take care of the mold issue. There's a lot of disclosures that will be shown that you might not see other places, so.
And just to add to that too, Zillow also does their estimates, or as they like to call it, their estimates.
Oh, yeah.
And those are always typically very far off from what the actual number is, which is another reason. So.
Yeah, the owner of Zillow, his home sold for like 20% less than what his estimate was. So even there, it just showed you like, don't pay attention to it. Yeah, I always have clients saying, oh, well, we're gonna write an offer for 2 million and it's, you know, the estimate says 2.1, we're getting a deal. I'm like, no, it might be worth only 1.8. Let's look at the actual comps of what's sold in the last 3 months and find out.
Yes.
Yeah. Anyone else? All right, well, again, thank you guys so much for joining us. And we'll stay on for a little while, but I'm going to end our recording and see you guys at our next session.
Bye, thank you for coming.
I just wanted to say hi to my friend Cindy. Cindy, I'm sorry I didn't get to say hi to you before. How are you?
Hi.